For those of you who are on the call who I've not met before, my name is Michael Goldberg, and I'm the executive director of our new Veale Institute for Entrepreneurship at Case Western Reserve. I also am an associate professor at the business school where I teach entrepreneurship, and a few of the folks on the call have been in class with me before. Jack, thank you so much for coming back to the university. I know you came back a few years ago to participate on our Innovation Summit, and we were introduced sort of over the phone. And, this speaker series, this alumni speaker series, which we kicked off at the beginning of this year in person with folks at ThinkBox, we've obviously morphed with the university going to remote delivery to do things via Zoom. But in some ways, actually, it gets us unable to connect with folks like you. And I know you're sheltering in place in New York and with your family, and we really appreciate you taking this hour. So the format today, so I'm going to turn it over to Rishi, who is one of our recent graduates working in the finance industry, who's going to be the moderator. All of our sessions are student moderated. And Rishi will ask a couple initial questions, but the hope is and I know there's, from looking at some of the faces on this call, probably be a lot of questions, which is awesome. So we really do want to get to your questions. So just put in the chat if you have a question that you want to ask Jack, and you can ask it directly. Just sort of let us know that you want to ask a question, and it'll be interactive, and we'll go for an hour or so. Jack, thank you for doing this, and Rishi, let me turn it over to you.
Sure. Yeah. Good afternoon, everyone. Thanks for joining. Thanks, Jack, for taking the time. I think this is a wonderful opportunity to meet an alum who's I would consider a super alum, because you're a student plus you're actually an academic here as well, a professor. So I think I really wanted to continue that nostalgia that you've been having, like interacting with your past friends and people around here who are joining you again. So walk us through about some of your experience you've had as an undergrad, and what really led you from being an engineer to going towards business, maybe.
Okay. Look, I went to Case for engineering. I ended up studying mechanical and aerospace engineering. What started is when I was a student at Case. I was doing a lot of biomedical engineering work, so I was spending time at university hospitals. And what I found was the campus provided lots of opportunities to get involved in lots of different things, right? And it was just a matter of engaging. So I'd met a couple of physical therapists who were working with some kids with disabilities, and I'd talk with them, find out that the kid needs a device to feed himself or herself, or a piece of equipment the therapist need. And here we are at Case, we had all the machine shops and all the fabrication facilities. I'd go back and would make a device and take it back over to the hospital, give it to them, and solve a problem. And it was kind of a cool way to use engineering in a pro bono way. So a bunch of buddies of mine started doing it as well. And next thing we knew, we formed a group. Roger Cerny and the Case Alumni Association gave us that $1,000 budget that we need, because we were kind of scrappy. We would just use the equipment that's around the shop. And we kicked off an engineering service organization. And, for me, that was, it was a way of obviously studying engineering, but also applying it in a real world setting. And that to me was a game changer, because I thought, well, look here, if we can do this as students and build product, when we go out into business, that's what we'll be doing, and somebody will pay us for it, right? So and I ended up staying to get a master's degree, because the prettiest girl in school at the time was a computer engineer, was a couple years behind me. So I wanted to wait for her. She's now been my wife for 28 years. My wife, Metka, was a computer engineer. And so I hung out, got the BSMS, which is, by the way, a great program. For an extra little bit of time, you end up with a master's degree, which does differentiate you. Even though I'm long far away from engineering, the fact that I have a master's in engineering is really important. So I stuck around, hung out with her. We got married right out of school, continued to run the engineering services group. And then, like a lot of things in life, it comes down to people. Frank was a mentor. Roger was just instrumental in my career. Tom Kicker, who had been the chairman of the mechanical engineering department, who then became dean, came to me and said, hey, look, we really like this engineering service group. Why don't you stick around, join the faculty, teach classes? I taught classes in product development, design, and manufacturing, and continue to run the engineering services group. And for me, I wanted to be a business guy, right? I knew the engineering side, but I'd go into job interviews and people would say, I'd go into the engineering job interviews, and a lot of you will appreciate this. I get through an interview, they'd say, why don't you think about sales? And I took that as a bit of an insult, right? Like, I mean, you don't think I'm smart enough to do engineering? You want me to go out and be a sales guy? And what they were really saying was, people were saying, look, you seem more natural as a business person. Why don't you? And it was kind of more in my DNA. So I ended up joining the faculty, and I taught for 6 years. And for me, it gave me a home base. I wanted to start a business. Professor Kicker said, look, you can do your business on the side, use the engineering school resources. I hired a number of my students. Everything was kind of fair game. And the faculty credentials, frankly, allowed me to charge more on the outside than I could have as just a young kid, starting a business. And so it was really the ecosystem of Case is what gave me that platform. And what a unique, undergrad that turned into a graduate experience that turned into a faculty position. Although, it really worked for me. And so my wife, she got her computer engineering degree, and then she did a finance MBA at night. But I can tell you a little bit more, but that was about the transition off to Wall Street. But that was my start. It was engineering, master's of engineering, started a business, continued to run the nonprofit. And by the way, that nonprofit program was phenomenal, right? I think I joined the faculty as an instructor in that year. The New York Times did an article, ABC World News came in and did this 5-minute feature, which was priceless. And it was because it really made sense. You're using engineering school resources, students, faculty. We had, at one point, engineers from NASA Lewis, I guess it's NASA Glenn now. We had local engineers working with our students, and our students would run, a day program where they'd get kids from inner city schools to come in, like junior high and young high school kids. We called it, it was around Christmas time, would make modified toys for kids with disabilities. These kids would come onto campus, would present, 6-year-old cerebral palsy who needs to be encouraged to keep her head up, or, a guy who needs to strengthen his arm or straighten his arm, and would have a bunch of equipment there and toys. And then the teams would break off, come up with a design, modify a toy, give it to the therapist. At the end of the day, they'd go through the circuit diagram to do a little bit of engineering and provide equipment to kids with disabilities in the Cleveland area. I mean, kind of no-brainer stuff, right? Just great to expose engineering, to expose young kids to engineering, provide equipment. Our engineering students were doing it at a higher level with very sophisticated stuff sometimes, and sometimes not so sophisticated. That was, kind of a snapshot of a bunch of years while I was on campus, and I was having a ball.
It's great to hear about your experiences. I think I want to follow up with the conversation. After that, you choose to go to business school, if I'm right.
Yeah.
Could you delve into some of your decisions there? Like, was that a transition, or you were hoping for something else, or?
Yeah, it was. So that one was, it was kind of funny. So here I was, I started a business, started a business with a partner. We were providing consulting services for the Americans with Disabilities Act to local companies. And then I did that with a partner to learn how to start a company. And then the next company, Metka and I started, and we were providing engineers and technicians to rehab facilities while I was teaching and while we kept the nonprofit going. And then I went through a process. I considered buying another company. And Roger will appreciate this. Remember the stud welding business, Roger? Yeah. The small competitor to TRW. And Roger, being the great mentor that he's always been, helped me connect with Brownie Neff, who was a legendary entrepreneur from Case, who had a small stud welding business. And it was huge for me at the time. It was probably $7 million in sales. And I considered buying that business because I went through the poor man entrepreneurial path. I sold my time. I hired people. I sold their time. We made some product and sold product. But the next step for me was then to buy a business. And I was in that process of talking with Brownie, and Roger was scratching his head saying, I think we can get financing somewhere for you to buy this business. And I just teamed up with another Case guy. It was just great stuff as I think back on it. And then I was at a faculty trustee lunch with a guy named Bob Smilik, and Bob had been at GE for 25 years. He was recruited, he ran a large division at GE. He was recruited by Goldman Sachs. They had bought a company called Insilco, which is a multi-billion-dollar industrial company. And they recruited Bob Smilek in to run the business. And, you know, I was at a faculty trustee lunch, and you know how you sit around the table, hey, what do you do? What do I do? And I was fascinated by his story of going from GE running a big division to running this private equity, multi-billion-dollar owned business. And he says, so what do you do? And I said, look, I've been doing all these kind of things. I was 29 years old, 28 or 29 to timestamp myself. So I'm older than, as I look at the screen, many of you, but it happens pretty quickly. So sit tight. And I said, look, I'm thinking about buying this business, and this whole buying companies thing is pretty cool, right? And he said, you know, people do that for a living. And I had no idea. He described what I do for a living now. He said, look, I have these two partners at Goldman Sachs who travel the world. They find these large companies to buy. They get people like me to come in and run them. And by the way, at that moment, I don't think I ever heard of Goldman Sachs. Maybe I did, I'm not sure. But I had no idea about Wall Street. My view of Wall Street was, you know, you sit here, you call old people in Iowa and sell them stock, right? I mean, it was that whole boiler room mentality is what I thought Wall Street was. And he said, no, these guys travel the world. They find these companies, they buy them. They get guys like me or people like me to come in and run them. Says they own them for 5 to 7 years. And what he said, I remember distinctly, he said, they make a ton of money. And I'm sorry if that offends anybody. That was important to me. I didn't come from money. I wanted to have a lot of money, not for consumption, but for impact. So they make a ton of money. He says they're really smart people. And he says, they're really nice people. I had never just heard Wall Street described that way. Wall Street to me were fangs and sharp elbows and snakes, right? And he described that, and he described my job. And I remember going back home, and look, this is going to be off color, but I describe it in a way. I tell me what, it's like somebody describing sex to you for the first time. You're like, oh, that's great. How do I do that, right? And he just described something that just resonated with me. I remember I went home and talked to my wife. I said, look, this guy just described a job that if that job exists, I want to go do that. Now, just for a minute, think about this. I had been out of school for 6 years teaching. We had a successful business. My wife was getting her MBA at night, right? And we were doing all the right things. We bought a house, remodeled. Literally, we were having a great life. And I told her, I said, look, in 15 to 20 years, on the path we're on, if we buy this stud welding business or another one, I think we could build a $100 million company. And that was ambitious beyond all comprehension from you know, it was ambitious, but I thought it was actually realistic. And I said, but you know, then 20 years from now, I'm going to be sitting here. What if I want to play with billion-dollar companies? I'm not on the path to do that. If I pop out and I do this Wall Street thing for a little bit, maybe then I can get into the billion-dollar company game. And God bless her. I mean, she is just, you know, she's a Slovenian kid from Cleveland, working class family. And she looked at me and I felt like the biggest wimp in the world. Hey, honey, I know you're going, you run our business with us. You have a full-time job and you're getting your MBA at night. I think I got to go to business school full-time, right? I literally felt like this big. And the champ that she is, she's like, okay, check, let's do that. And for me, going to business school was a step to go to Goldman Sachs. And I went to Wharton because I wanted to, you know, obviously to go to Wall Street. That's a pretty good place to do it. So I get into Wharton and I went there full time. Now we had been married for 6 years at the time. She's like, well, look, I still have a couple classes to finish up at Case. Why don't you go to Philly? I'll stay here. We'll keep the business going. I had a 100-pound wolf that we had at the time. He went with me. So she would fly in on the weekends because Zeus was with me. So every other weekend she's flying into Philadelphia. We're keeping the business going. I'm going to school full time. So I kind of have the single guy life and lifestyle at business school. Then she'd come in and would hang out with all the couples on the weekend. She'd leave some money on the dresser on the way out. I felt like a kept man. And we would, you know, that's what we did for 2 years. We just lived it. She goes, look, you know, you're ultimately going to go to New York. So why uproot everything? We'll just do this for 2 years and then we'll both get back together in New York. And our friends are looking at us like, well, you guys splitting up? What's going on, right? It's kind of funny, actually. Now, in hindsight, it's weird. At the time, that's just what you do. right? Look, we're working all the time anyway. So anyway, that was the transition from, case and engineering and the entrepreneurial path that I was on. And by the way, I thought, and I go to Wharton, I want to go to Goldman Sachs, and I get there and I have 800 people in my first year, MBA class at Wharton. 400 of them wanted to go to Goldman Sachs. And I'm thinking, I thought I was in. As soon as I got into Wharton, I'm like, oh, sure. It's like, Brian, you going into Morgan Stanley. There are only a few of those investment banking seats. And so I get to Wharton and I ended up getting lucky. I got a job at Goldman Sachs. They hired 12 of us. And I got a job in investment banking in New York. And by the way, I thought I was going to run into a bunch of snakes. And I thought I'd just go there, kind of learn what they do, and then go back to doing my own thing. And, I ended up spending almost 20 years there. Was a partner there, ran the industrials and services business. I made a transition from investment banking over to private equity. Rishi, so that gives you a little bit of that transition.
For sure. Right now, I want to pause a little bit to actually allow everyone, if they're willing to ask a question, either you can raise a hand or you can type it directly to me. I just want to continue the momentum actually in the meantime. I'm wondering, if you could also attach a timeline to your experiences, that'd be awesome, so that we get some frame of reference, because I would assume during this time, private equity wasn't in the same way it is right now, with the exposure that it's had, with all these funds rising. It'd be great. And, you've had a tremendous 20 plus year successful career at Goldman Sachs after. Could you delve a little bit into your early starting points? Because what I've heard is, starting as an investment banker, the first year you start and you already get recruited by a private equity firm, and the churn is real. People go into it to get out of it. So how did you actually sustain that 20-year career of yours?
Yeah, well, it's interesting. Well, to be clear, I was in investment banking. I got hired to Goldman into investment banking. But I moved into the private equity business with inside Goldman Sachs after 6 months of being hired into investment banking. So I did make that transition pretty quickly. But what's interesting, and you have to put in perspective, so timestamp it. I was 30-ish, early 30s at Wharton, and this was the .com and telecom heyday, right? Bubble was full force, right? And so I'm getting out of Wharton at the end of the 90s. And, a lot of my classmates are going out, raising $25 million for sellmypet.com or, pick it, right? Whatever, PayPal. They're starting all these businesses, these tech businesses, because that was the rage. Everybody was doing it. And people came up to me and they were looking at me and they thought I was a complete fool, most of them. They were saying, wait a second, so you're an engineering instructor, you're an entrepreneur, you've built businesses, and now you want to go into investment banking. What's wrong with you? Right? You poor kid. You have no idea. I was this kid from Pittsburgh who went to school in Ohio that they just thought, well, what are you doing? For me, I wanted to get that fundamental skill set. I wanted to get that hardcore finance skill set. So for me, investment banking was a way to do that. I said, look, private equity is probably something I'll do later, but I want to get that toolkit through investment banking. And I thought there was no better way to do it. And by the way, I still believe that. You can go into an investment banking program. It is a foundation that is second to none. So for me, I didn't even look at anything else. I didn't interview for private. I just went. I wanted to go to Goldman Sachs. So I get the summer job, accepted on the spot. They offered me a full-time job, accepted on the spot. Even the person who offered me the full-time job at Goldman, they said, wait a second, don't you want to at least consider anything else? I said, no, I came here to go to Goldman, right? So I get to Goldman, and you're right. The move from investment banking to private equity is something. If put Goldman Sachs in perspective, Goldman Sachs has 35,000 employees. There are 7,000 or 8,000 investment bankers, right? Our private equity team within Goldman Sachs is 250 people plus or minus investors, and then staff, right? 35,000 people, 100 private equity people. That 100 private equity people drives 20% of the profitability of Goldman Sachs. So a very disproportionate impact on the profitability of the firm, and the economics in the private equity industry are truly extraordinary. By the way, investment banking, you make generational wealth as a successful investment banker at a top Wall Street firm, but you have 7,000 of them that, a lot of those people want to be one of the 100 people in the private equity space because the economics are that much greater. And so there's the continuing funnel, and it's just hard to get those private equity seats. So Rishi, people do recruit out of investment banking. We hire people at TPG, and we typically go to the investment banking pool to pick people out. But when Brian goes to Morgan Stanley, it was a Morgan Stanley Brian goes to Wells. When you're there, you do start the recruiting process, but there are very few seats in the private equity world. So finding your way into that is the challenge. And for me, look, I ended up, I made a good impression right out of the gate. And I had a truly extraordinary first week on the job that I talked to. It's kind of a fun Wall Street experience, but I got to know the head of our group. And, 4 or 5 months into literally my first year, I was very brand new. They said, how's it going? I said, look, it's great. It's like a 98% solution for me. And at some point I'll probably do private equity work. And when I found about Goldman Sachs, and I found for the 20 years I was there, Goldman Sachs there's a reason there's a mystique there. There's people make decisions based on what's best for the firm. And in my case, what was best for me, not necessarily what was best for them. Right. So the head of my department thought, hey, I see somebody with talent that I like. And he helped me make a move into private equity, literally completely off cycle, 6 months into it. And I moved into private equity 6 months after I joined Goldman Sachs. And I've been doing that for now going on 25 years.
Okay. I think Daly has a question. So you can unmute your mic if you'd like to.
Hi, I'm Jaya. I'm a rising junior studying accounting and finance. I'm currently in Houston right now. I was just wondering for Jack, what was the most challenging thing that you faced working at Goldman?
Well, Jaya, I will say that, and by the way, put my work life at Goldman, particularly early on, people talk about, and Rishi alluded to, it's, working around the clock, and everybody talks about, wow, it's really, and by the way, that's no joke. When I say it's a busy work schedule, I was working probably 110 plus or minus hours a week. And that wasn't, wow, that was a busy week, or that was a busy month, or that was a busy quarter. That's what I did. I mean, you just do that. And you know what though, Jai? Some people might say that's the toughest part. That wasn't the toughest part. I mean, for me, look, I was at Case teaching, 3 classes a semester and 2 over the summer, running a nonprofit program, a for-profit program, and remodeling a house, right? I mean, like when you're young, and this is what you do. Like you kind of, I never sat there and watched the clock say, oh, I can't believe I'm working. You just do that. And you pull all-nighters and you work around the clock because the deals we're working on are pretty hard. So it's not the work pace. That is tough. But if it's for you, it's kind of like playing a championship game all the time. You're just into it, right? But if it's not for you, it'll feel like a drag and you don't belong there, and you should go somewhere else. Find something that you're that passionate about. I'd say the most challenging part, it's still the most challenging part of my existence, is the intellectual challenge and pace and intensity. And you're always on. Right? There's nowhere to go to relax for a little bit, and that's okay. It's that working with when you're around world-class people or working at a world-class level, there's a pace that you have to go all the time, and I think that's challenging. Now, I like that challenge, I really do. And by the way, I'm far from the smartest person in the room. I'm far from the hardest working person in the room. I might be one of the luckiest people in the room, but I do find that working in those kind of environments, and if you want to go on kind of a successful entrepreneurial path or a successful path, no matter where you are and no matter what field you're in, you're going to really compare yourself with the top performers across the board. That's the challenge, and kind of I like that.
Yeah, awesome. Thank you.
Rishi, you're muted. I got you.
Okay. Thanks for checking on that. Brian also has a question here. You can unmute your mic.
Yep. Thank you, Rishi. So I have a question for you, Jack. How do you see the debt capital markets and your current position at TPG being affected in the long term from the coronavirus? And then more specifically, do you see the LBO market slowing down due to the coronavirus, or do you see it rebounding relatively quickly? Thanks.
Okay, and I got most of that, Brian. There was a little bit of bandwidth issue. I don't know if it's on my end or yours, but how the debt capital markets and what's the COVID impact on the debt markets? Let me put it in perspective. So I think the most interesting way to think about the debt markets, I could take you back to the last crisis because we learned a lot from the last crisis versus this one. So leading up in the buyout business, leading up to that last crisis, in 2005, I got together with a bunch of people and we started the effort to take Aramark private. Aramark, the food services business, I think they have the case contract. So I hope you liked your food while you're there, because we ended up taking Aramark private in 2006. It was an $8.5 billion. Now, I started the private equity space in the late 90s. And so as you went all the way through the 2000s, you got to a point, and in 2005, when we had all the top bankers at JP Morgan, all the top bankers at Goldman Sachs in a room, we were saying, can we find $6 billion to borrow in the debt capital markets anywhere around the world? And it was a hand-wringing conversation. We literally had the heads of the leverage finance groups sitting there saying, well, we think we have some Asian money and some sovereign wealth money out of the Middle East, and we probably cobbled together some of these BDCs were being created. And they said, we think we can have you borrow $6 billion. We don't know that, but we think we can. That was in March of 2005. We ended up closing on Aramark in January of 2006. And that was the start of the large buyouts, right? So that $8.5 billion deal, which would be one of the largest deals done up until that point, and it was hand-wringing. By the time we closed on it in 2006, the guy in the office next to me, Ken Pontarelli, was taking Kinder Morgan private in a $24 billion deal. And our $8.5 billion total deal size was his equity check. And they were borrowing $16 billion. And then at the time, we started talking about $100 billion buyouts, which is just, I mean, that was crazy, right? The world took off quickly. And then we know what happened. The world collapsed, right? Financial crisis hit, everything fell out. And by the way, when we were going into the financial crisis, we were doing deals like Aramark and some of these others. We were, because there were no strings attached to this money. But the covenants, forget it. We were putting all kinds of borrower-friendly language in it. And then the world collapsed and the whole bottom fell out. And you'd think that at that point, sorry, you guys do we have bandwidth issues? Can you hear me?
I can hear you.
Hey, keep going, Jack. You may be breaking up. Oh, did we lose him? Okay, we're back. Okay.
Sorry about that. I was on a roll, but then all you guys froze.
We're plotting against you.
Where did I lose you?
We come close to it, maybe like 10 seconds ago.
Okay.
You were talking about the collapse.
Yeah, so we were talking about borrowing $6 billion and the world took off. The crisis hit and we thought, oh, okay, well, that was just a moment in time. That's never going to happen again. I will tell you, the debt markets came back 2 years later, 3 years later. And for the past, let's say from 2000, 2009, 2010, for the past 9 years, I've been able to borrow more money, lower, strings attached. The debt markets have been insane, literally insane. I mean, they shouldn't be lending us this much money with these no strings attached and everything else. So sorry, that was background getting up to where we are now. So what will happen right now? The debt market's cratered for a couple of weeks. Boeing just did a $25 billion financing over 40 years at 5% rates. I got news for you. It's just the market's, awash with cash because the Fed has been pumping a lot of liquidity in the market. Lenders will still lend money at too low interest rates with no strings attached, and it's and Wall Street is they just go right back to it. So I think the debt capital markets, I mean, we'll go through periods of time where they'll be stressed, and we have seen a couple of those, but this crisis is a little different. Last crisis, it was a Wall Street crisis, right? Where banks were, there was a moment in time I thought gold might open up on Monday. So, look, I think the debt markets come back pretty quickly.
Thank you. Appreciate it.
Yep. So now we have Matthew Lee asking a similar question. I think Peter Durant is also trying to allude to.
Once again, we're having bandwidth issues.
Yeah.
Hello. Hi, my name's Matt. I'm a rising sophomore at Case.
Hey, Rishi, can you hear me?
Yeah, I can hear you okay. I think you're coming out fine. I think your video is a bit lagging, so. Hey, Jack.
Oh.
Jack, can you speak out something? Testing. 1, 2, 3. I guess we lost him for a bit.
Uh-oh.
All right. How's everyone doing?
Here we go. Jack's back. Okay.
Okay.
Hey.
All right. Yeah, we can hear you just fine now. All right, Matt.
Okay.
Matthew, go ahead with your question.
Hey, my name's Matt. I'm a rising sophomore. So you said that you went into investment banking right out of business school. What would you say is the difference between going into investment banking out of undergrad and out of business school, especially considering that a lot of us are undergrads?
Yeah. Look, if I had it all over again, I would go directly. I would have done it differently. Look, honestly, I have no regrets. The time I spent at Case building the business is priceless. It clearly is. But had I understood what an industry it was and how it was such a great fit for me, I probably would have gotten there sooner. I think that coming out of undergrad and getting into something, I think if you can get into investment banking out of undergrad, I don't think there's anything quite like it, to be honest with you. Even if you want to be an entrepreneur and go run your own business, and you might think, okay, well, I should go the corporate route. I actually don't think so. I think you get a fundamental finance skill set that, like I said, is second to none. You're dealing with in investment banking, you're dealing with raising capital either from debt or equity, or you're buying a company, or you're selling a company. Those are the 4 things you do. You raise money through debt, you raise money through equity, you buy a company, or you sell a company, right? And that's what the CEO and CFO are focused on in every business. So you're dealing with the things that in the board, the most pressing issues that they're dealing with, right? That they're spending their time. So you're in the room, right? I mean, look, in my first couple of months in investment banking, we thought John Malone could raid Disney, could do an unfriendly takeover of Disney, and using what Michael Eisner, who was the CEO of Disney at the time, called monopoly money, right? Because John Malone had internet bubble stock that he was going to use to take out Disney. And so here I am, literally 2 weeks on the job, and I'm in a meeting with Michael Eisner. Tom Staggs was the CFO of Disney, talking to them about the potential for John Malone to raid them. 2 weeks on the job, right? And I'm in the room because in investment banking, we had 4 or 5 people on that deal team, and would all go, right? So I wasn't the most senior person on that deal team, but I'm sitting there in the meeting because I owned the numbers with a junior resource. So for me, that junior resource was I call him or her, I don't remember at this point. No, it was him. Josh was a kid out of undergrad, right? 1 year out of undergrad. And he's sitting in a room with Michael Eisner and Tom Staggs and a couple of people from the board of Disney, hand-wringing that they're going to get raided in a $20 billion raid, right? So I just don't know any other career path that gives you that kind of exposure. Now, that might not be for you for the long run, or it could be. You might get there and you love it. I have a lot of friends who are senior people in investment banks, and it's an extraordinary career path. But it's like engineering. Like my engineering degree, I don't use, right? But the fact that I have engineering, I understand technology, I can walk a plant floor, And frankly, it makes people think I'm smarter than I am, to be honest with you. That technology and engineering background does actually give you an advantage. You just, because it intimidates people who don't have a technology background. So I think that, having the engineering background, getting an investment banking background, and using those fundamental building blocks to then decide exactly what you want to do later. And by the way, take a meandering path if you want, as long as you keep, being successful. One of the things I spent a lot of time with is because I get a lot of linear people, right? The woman who goes to undergrad, gets out, does 2 years investment banking, does 2 years in private equity, goes back to business school, and they're on that linear path. Or worse, they do 2 years investment banking, 2 years of private equity, and they say, oh, I don't want to go to business school because there's an opportunity cost of me spending 2 years, which, by the way, is completely ludicrous. Go to business school. It's 2 years of your life in a petri dish with world-class people who are smart, young, and ambitious. And it's a luxury in life that everybody should take advantage of. I'm shocked at how many people think that there's some kind of cost to that. There's none. There's a financial cost and there's the time off and everything, but it's so worth it. The investment you get is just so worth it. I think, there is a linear path, but don't be afraid to take those diversions, right? Go spend 2 years in the Bay Area, doing the startup thing, right? When you're young, coming out of undergrad, if you do a couple of those things, you can punch out. You can always reset yourself by going back to business school. Of course you should do that. You should do a ton of things. I got out of business school. Let me also timestamp it for you because this is important. I got out of business school at 33 years old. I was a few years off the average. I wasn't the oldest guy. There was a guy who was a professor of math at Princeton, and there were a couple other people. But I was on the bandwidth. I was kind of in the probably top, I don't know, an age. It was probably 10 to 15% of my class was older than me. Doesn't matter. It just doesn't matter. In that vintage, everybody's kind of the same. And if you start comparing yourself to, well, that person got there 2 years earlier, stop yourself. Just please stop yourself. It just doesn't matter.
Okay, thank you.
Yeah, thanks for sharing the advice, Jack. Now we have Victor asking a question next. You can unmute your mic.
Hi, Jack. My name is Victor, and I'm a rising senior. And thank you for taking the time to talk to us today. So you mentioned you were able to make an impact pretty quickly at Goldman. So for those of us first entering the workforce, either as interns or first-year analysts during these strange times, what would you recommend us do to make an impact through remote work or virtual interactions?
A couple things. One is absolutely be prepared, be over-prepared. What happened to me, let me give you a quick story because it's actually pretty interesting. So you go through your investment banking training and then you hit the floor, right? You hit the floor on Monday. So here I am in investment banking training. Before that Monday start, I get a call on Wednesday from the staffer in my group saying, hey, we have something that came up. We think Disney might get rated by John Malone. And Mac Heller, who is the head of M&A, there's a meeting on Friday at the end of the day with Mac Heller to walk him through some numbers. They want you to do it. Keep doing your training stuff. But by the way, can you just get that analysis together, right? So here I am Wednesday. I do 2 all-nighters, prepare the material for Mac Heller. Friday, end of the day, we're saying, wow, this is actually, and Mac was sitting in his office with all of us and we're going through the numbers. He's like, well, this could actually happen. Hank Paulson has a meeting with Michael Eisner on Sunday. We have to brief Hank on Saturday. Put a briefing memo together. Hank Paulson, brief him on Saturday morning. I'm literally now, I probably have had, 12 hours of sleep in those 3 or 4 days. He has a successful meeting on Sunday with Michael Eisner. They hire us and do the anti-raid. I get a call, I'm wiped out, right? After briefing Hank and Saturday morning, I'm crashing. I get a call Sunday morning. Hey, the head of our group has a meeting on Wednesday with USA Networks on a potential buy side. Okay, I'm still getting, can you hear me? It was up on me again.
Yeah, there was a little drop, but I think you're fine again.
Okay. So I get the call Sunday. Hey, we have this, this meeting on Wednesday. The head of our group is meeting with the CFO of USA Networks on a buy side of kind of $1 billion companies. by the way, we know you've been cranking. You don't have to take it, but if you want to do it, take it. I said, of course. And it's with a managing director who's a rising star, a guy named Bobby Banks. So I go back in the office Saturday afternoon or Sunday afternoon. I work around the clock to prepare the materials for this Wednesday meeting. Prepare the materials. I get in the car with Bob Harrison, who was the global head of our group at the time, heading up to this meeting with the CFO of USA Networks on this buy-side opportunity. And Bobby Banks was going to present. I was just a junior person who put the deck together. I get in the town car with Bob Harrison, and I kind of flip him through the book, and he's kind of being polite but not really paying that much attention. We get to the meeting with the CFO of USA Networks with 7 of his direct reports. We walk in the room. It becomes clear to both Bob Harrison and I that Bobby Banks is a no-show for the meeting. Completely missed the meeting. Bob Harrison looks at me as we sit down and says, "This is your meeting." I'm now 3 days old, 3 days on the job, right? I get up and I give a presentation on 8 potential companies that USA Networks should buy. We go through the full meeting, hour and a half discussion. We get to the end, we're shaking hands. Bobby Banks walks in the conference room. He just got caught coming across Midtown, completely whiffed on the meeting. We all shake hands. We get out. We get in the elevator, and we're standing in the elevator. Bob Harrison here, Bobby Banks there. Bobby Banks looks at Bob Harrison and says, "Am I fired?" And he said it in a very direct, because it was a real question, right? Bob Harrison looks at him and says, "No, he did fine. He saved your job," right? And then Bob Harrison looks at me and he says, "By the way, you do understand that at Goldman Sachs we hire people who, it doesn't matter, just when stuff happens, you got to be able to fill in, right?" And so it was actually pretty funny. And then so immediately, USA Networks did hire us to do that buy-side work, and USA Networks bought a $2.5 billion company. And Michael Eisner's meeting with Hank Paulson led to us getting the anti-raid assignment. And so we went to the mattresses with the board at Disney to fend off a potential raid from John Malone. And so literally we were working around the clock on both those deals. And I just happened to Forrest Gump my way into both of those situations. So I was instrumental on both teams. So in the first 6 months on the job, if I came home from the office, my wife was already asleep and I was leaving before she woke up. And literally it was just around the clock for those 7 months until they moved me into the private equity business. So long-winded answer to your question, I would say be prepared, be over-prepared, be ready to step up, and then also be the athlete. So how do you distinguish yourself from a distance working remotely? By the way, it sucks. It just does. Let's face it. This is hard on everybody, right? But it's also hard on your bosses. It's hard but be that person who's kind of Johnny on the spot, get all your work done. And then when you're done and you've had that exhausting day, spend the extra hour thinking about what you can do to go beyond. And even if you do something that goes beyond and it's kind of like not even worth it because people aren't paying attention, it doesn't matter. Just do that and keep kind of overdoing it. Because if you try 20 times to come up with something extra when you're young in your career, even a blind squirrel finds a nut. Every once in a while, you're going to come up with a decent idea. And 19 of those things will not be good ideas. But if you get one, that's what people remember. So look for those ways of just kind of going a little bit above and beyond for what it's worth.
Great, thank you.
Yeah, thank you for sharing, Jack. I think that's wonderful advice. We've got Ethan Glickstein asking a question next.
Hey, Jack. Thanks for being with us today. My name's Ethan Glickstein. I actually just graduated CASE 2 days ago, virtually, of course. Starting a job in New York in investment banking this September. So my question for you, switching gears to a more general view of private equity, given the market downturns, particularly hurting the energy, aviation, and brick and mortar businesses, how do you think private equity can play a role in helping struggling companies get through this period of uncertainty?
Well, look, we're a large part of the economy. I'm not tone deaf to understand that private equity has been a bit of a whipping post for a lot of people, particularly in politics, that private equity somehow is evil. You'll have to forgive me if I don't believe that, and if I don't. I understand where it comes from. There's an inherent side of, we do borrow money to buy companies. And so you are putting debt on businesses. We are in a risk business. So we do take risks, and they don't always work out. I've failed spectacularly in a couple of situations. And there's nothing good about that. It's just, that's the business we're in. The way I think about private equity, though, is, I work for, Texas teachers. I work for the machinists, right? And these pension funds. I'm working to provide returns to them. They're the people who give us money to put into these deals. And we're doing in New York State, public employees. That's who we work for. We work for those people to provide them with returns, to provide their pension security. So that's why we do it. And that's why we do it and get the kind of returns we do. And we do take risks to do that. There's no question about it. Look, private equity can play a significant role. Now, let's put it in perspective. Private equity's a large part of the economy at this stage, right? I mean, I go back 25 years ago when I started this business, and you go back 25 years before then, that's when it started, right? It really started in earnest in the 80s. RJR Nabisco was the first big deal. It was done by KKR, but our guys started TPG, Jim Coulter and David Bonderman in 1991 with Continental Airlines deal. And they took over Continental Airlines, which was an absolutely struggling business, and turned it around. It was a huge home run. What we do, and by the way, private equity now, you'll say, there's a lot of capital in private equity chasing fewer deals. It's not true. We're able to buy larger parts of the economy, right? Larger businesses. When I started this business, if you got to a certain size, you had to go public. There was no other way to do what you needed to do. And other than going to the public markets, now we have some of the largest companies in the world that are private companies, right? We're early investors in Uber, and we kept Uber private for a very long time before going out to the public markets. There are lots of other businesses that will stay private for a long time because you can. So private equity can play a role. Let's say in the situations that we're seeing now, there are clearly areas of the economy, you mentioned a couple of them, that are just, the world has changed on them significantly. And a lot of those businesses need to raise money, and we are a large source of capital. Like from my perspective, we just raised a $14 billion fund, right? So we have $14 billion of fresh capital to put into situations. I invest kind of $250 million up to kind of $1 billion. Typically, we can do multiple billions, but $250 million to $1 billion into any one situation. And so from my perspective, we are a source of capital that can be thoughtful. We can partner with businesses. We are very experienced in helping management teams manage through crisis, turn businesses around. Now, there's some private equity people, we're not one of them, that buy broken businesses, right, and try to fix them up. We just, we get involved in broken businesses, but to be honest with you, it's not on purpose. It's because we thought it was going to be better, and it ended up not working out. So we're very experienced, in some ways, unfortunately, very experienced with tough situations. We tend to look for really good businesses, buy them, help manage them through, a crisis, and get out on the other end. I'll give you an example of a business we own. We own Cruises, right? Viking Cruises was zero revenue for some period of time, right? You tell me when the cruise industry will be back up and running. The fact is, a company like that, right? We have a healthy balance sheet. They have $1.3 billion of cash in the bank. We will, work with them to support that business as we go through this, terrible time for the cruise industry, and that business will be there on the back end. Now, in some cases, leveraged businesses that go through a crisis like this that weren't expecting it won't survive. They'll go through bankruptcy. We have bankruptcy laws to be able to take care of that, and that's failure in our minds. If we have a levered business that can't make the crisis go through, and we obviously try to avoid this, but then other business through that, we can be, a source of much needed capital, at a time that I see frozen faces again. I'm not exactly sure what's happening with the bandwidth here.
We can hear you. I think your face is just lagging. It's catching up to your audio. Okay, we lost your audio as well now.
And Rishi, I'm looking at, hopefully we'll get Jack back in a second. Maybe we will. And I know there were D who had a question.
You're completely breaking up on me.
Yeah.
You know what, Jack, with the bandwidth issues, and we're almost at the 2 o'clock mark. I don't know if you can hear. It looks like you're frozen on the screen. Maybe I will sort of jump in, and we're lucky that we got most of it in, and it was an awesome session. Oh, Jack, you there?
Yeah, he's here.
Okay. Cool. Can you hear me, Jack? Anyway, let me just take the liberty as we wrap up, because we almost are at the 2 o'clock. Rishi, let me thank you.
Sorry, team, we had some issues.
Thank you. Yeah.
Great. I'm just wrapping it. You're frozen on our screen, Jack. So let me just sort of wrap things up. We're almost at the 2 o'clock mark. So I was just sort of thanking everybody. Let me quickly thank Rishi. And make 2 announcements. We do have 2 more sessions this week, also focused on a little earlier stage than where Jack plays. Tomorrow we have Sean Gandhi, who's an alum from 2007, who works in the venture space on the healthcare side. Sean's a Rhodes Scholar coming out of Case, and also has degrees from Harvard Business School and Harvard Medical School. So he's going to talk about healthcare investing. And then on Thursday, Tim Schigel, who's in the venture space, very early stage, doing things, not only in the Ohio region where he's based in Cincinnati, but helping commercializing things actually out of the university. So Tim will be with us on Thursday at 1 o'clock. But this is great. Rishi, thank you again for doing this. And Jack, luckily your bandwidth issues only really took hold at the very end. So we were able to catch almost everything that you were saying. And I think for our students, a lot of recent grads on here, I know a number of people who are either going into the finance world upon graduation or are planning on it. I think your advice and perspective has been really useful. So Jack, thank you so much for doing this today.
Happy to. I wish the technology were better. Frankly, I even wish more that we were all together in person, but I'm glad to see so many familiar faces out there.
Awesome. And we'll look forward to, when this all ends, we'll look forward to welcoming you back to campus soon.